Hello everybody! Exciting news in Ottawa's real estate market as we dive into the latest numbers for September 2024. Buckle up because there's a lot happening. Before we begin, the purpose of this video is not to analyze every single data point that the Ottawa Real Estate Board puts out. Instead, I want to help you get a clear picture of the market so that you can buy or sell with confidence in the coming months. Whether you're just starting your search or thinking about listing in the coming months, I encourage you to visit the links in the description of this video for plenty of helpful resources. First off, let's talk about home sales. This is very simply the number of actual unit sales during the month across all property types. A total of 1,047 homes were sold in Ottawa this September, and we can also compare this to the number of sales during the same month last year. Sales were actually up 11.4% compared to September 2023. But year over year, sales don't always tell the whole story. Historically speaking, it's worth noting that sales were still 17.4% below the 5-year average and 15.4% below the 10-year average for the month of September. Now, what about housing prices? The average price for all homes sold last month came in above $685,000. That's a 1.4% increase from September 2023. A more accurate way to measure housing prices is with the MLS Home Pricing Index, or HPI tool. The overall HPI composite benchmark price stood at $642,800 in September 2024, up 0.2% from last year. This figure represents the price that a home buyer would pay for a typical home in Ottawa. For single-family homes, the benchmark price was $729,000, up 0.5% year over year. Townhouse and row units, however, saw a decrease to $500,000, down 1.7%. And for apartments, the benchmark price was $414,200, down 1.3%. You might also be wondering about inventory. If you notice that there are more homes on the market currently, you'd be correct. In September, we saw a 3.9% increase in new listings from last year, with over 2,300 new residential listings added to the market. That's 4.7% above the 5-year average and 11.6% above the 10-year average for the month. Active residential listings were 3,529 units, a 16.9% increase from last year. The bottom line is that there are a lot of options for buyers out there right now. The numbers are one thing, but what does this all mean for you? You might have heard the term buyer's market or seller's market before. Right now, things are getting interesting. If we divide the number of sales in a month by the number of new listings, we arrive at the sales to new listings ratio. That figure is currently sitting at 44.5%, and when it gets below 40%, we're classified as a buyer's market, and the market will favor buyers. When it gets above 60%, it's a seller's market and favors sellers. A figure between 40 and 60% is classified as a balanced market, whether neither the buyers nor the sellers have the upper hand. But over the past month, the market has gone from 56% down to 44%, a 12% shift towards buyers. Ultimately, this is due to buyers having a lot more inventory to choose from and gives them the ability to take their time and view a large selection of homes before making a purchasing decision. There was 3.4 months of available inventory in September, and this means that all things being equal, if no new listings came onto the market and demand remained the same as it is now, it would take almost 3.5 months to sell all of the current available inventory. And now, if you've had your eye on the market, you've probably been thinking about interest rates. If rates drop, what effect will this have on home sales and housing prices? It's definitely expected that we could see some additional rate cuts to close out the year. This wouldn't come as a huge surprise. Not only have most analysts predicted we'll now see multiple cuts to close out the year, the Bank of Canada themselves have acknowledged this possibility. Additional rate cuts could certainly cause demand to increase, which could also cause housing prices to rise. Ottawa Real Estate Board President Curtis Fillier weighed in saying, as we navigate a shifting housing market, Ottawa's fall outlook is healthy. He points out that there's been a robust uptick in both sales and prices, while buyers and sellers are reassessing their purchasing power amid discussions of potential interest rate cuts, longer amortization periods, and increased price caps for insured mortgages. On a year-to-date basis, we've seen a total of 10,485 homes sold in 2024, marking a 6.4% increase from the same period last year. This shows a resilient market, even as we navigate some ups and downs. Villiers also highlights an important issue. Ottawa's housing market does not typically have demand problems, we have chronic supply issues. In other words, we're not building enough homes in the city, especially the types of homes that address what's known as a missing middle. Did you know that the Canada Mortgage and Housing Corporation recently reported that Ottawa's adjusted population construction is at its lowest level in nearly a decade? According to a City of Ottawa progress report, we've only reached 22% of our annual housing target by the end of August. Overall, the volume of home sales was more than 717 million, up 12.9% compared to last year. So whether you're looking to buy or sell or just stay informed, it's an exciting time in Ottawa's real estate market. If you have questions or need guidance, feel free to reach out, and don't forget to subscribe for more updates.